All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer: nothing in this podcast or any of our other materials should be taken as investment advice. James and I could have positions in any of the stocks we may mention today, and we reserve the right to change those positions at any time. So always make sure you do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be a small company called Net Capital. So Net Capital has a business model where they run an online marketplace where individual investors, ordinary unaccredited investors, can go onto their platform and take a look at a list of companies that have listed of private companies that have listed on Net Capital's website, and these ordinary people can make small investments in these private companies without having to be an accredited investor. So basically, you can think of it as kind of aiming to democratize private market investing for ordinary people. And from the perspective of the companies that list on Net Capital's marketplace, it gives companies that would not have access to traditional venture capital or private equity funding a way to raise small amounts of capital, but from unaccredited ordinary investors, and therefore a lot of unsophisticated investors too. Net Capital, they make their revenue by charging fees to the startups that raise capital on their platform. So usually a few $1,000s plus a percentage of the amount raised. And historically, the majority of these fees have been paid in the form of the startup's equity as opposed to in cash. So the majority of Net Capital's revenue has been in equity in these tiny startups and hasn't been actual cash revenue. Now, Net Capital is a small private investment marketplace, and the companies that list their investment opportunities on Net Capital's website, they're not the latest and greatest startup companies that you would recognize. They're usually startups that do not have the ability to raise capital from traditional private equity or venture capital companies, and have to resort to raising capital on places like Net Capital instead. Usually, these companies only raise tens or at most hundreds of thousands of dollars on Net Capital. If you think about any legitimate startup, they wouldn't waste their time and their reputation, quite frankly, by listing their shares on Net Capital's website. So here you can see one example of a company that was on Net Capital, Cutting Edge Superconductors, which only raised about $150,000, but they claim to have this groundbreaking technology that's going to disrupt trillions of dollars worth of markets. So obviously, this company that's listing on Net Capital is of dubious integrity, and these are the types of companies that you tend to see on Net Capital, not legitimate startups that have a viable chance of being 100-bagger moonshots. In addition to the fact that this startup equity, which makes up the majority of Net Capital's revenue, is of very dubious value, their total revenue is also declining massively in the past couple of years. In the most recent quarter, their total revenue declined more than 80% versus the year ago period. And their revenue has gone down so much that they're not even able to cover their corporate overhead expenses like that, and they're making massive operating and net losses. So because their revenue is declining so badly and the revenue that they do have is of such poor quality, the company has been forced to resort to diluting its own shareholder base in order to fund its cash burn. So you can see here on the top right, we have a chart of their total shares outstanding, which is from a short report on Net Capital, which we released on our website just a few weeks ago. But from this chart, you can see that in the past few quarters, their total shares outstanding has increased massively. In fact, in the past year alone, it has increased by 10 times. And as the share count has increased, the share price has decreased in tandem. With the deteriorating quality of their business, there's really no reason to be that confident that anything's going to change anytime soon. Despite all of that, in the past few weeks, the company's stock price has surged massively. It's surged 4 times, And this has been because a few weeks ago, they formed a DeFi advisory board. And because of that, investors are anticipating and hoping that they're going to announce some sort of initiative related to crypto or something that Net Capital is going to do. And that has caused a lot of hype in the company and caused their stock to surge by 4 times, despite all the difficulties that we just discussed. So with that, I'll kick it over to you, James, to talk more in detail about Net Capital and what's going on with them these days.
Yes, thank you. And we'll start off by looking at the startups that list on Net Capital. So as Ryan explained earlier, typically these startups they have to pay fees to Net Capital to list on the platform, and those fees are almost always paid in the form of equity. So Net Capital, their reported revenue, only a tiny portion of that is cash. The vast majority of their so-called revenue is actually in the form of equity stakes in these startups that list on the platform. Now, because they had received their revenue in the form of equity, they have built up a portfolio of equity stakes. And as of the end of their most recent fiscal quarter, which was on January 31st, they showed the value of their portfolio of their stakes in these equity startups, which they had accumulated over time. And they have 22 investments here, and they claim that the book value of these equity stakes in these startups, is worth $24 million. So they have cumulatively received $24 million worth of equity from these startups that have listed on the platform. And also, as Ryan explained earlier, the quality of these startups is highly dubious and highly questionable. So this $24 million of value that they supposedly have in this portfolio can also be called into question. And in fact, on April 30th, Net Capital conducted an assessment of its portfolio companies. That's this $24 million worth of equity stakes that they claim to have. They conducted an assessment, and then they were forced to recognize an impairment expense of $18 million. So out of the $24 million of book value of these equity investments, they had an impairment of $18 million, which is 75%. Of the 22 portfolio companies that they had on their balance sheet as of the end of the most recent quarter, 11 of them had ceased operations and no longer exist and are therefore now worthless. So these are these are mostly tiny startups with just a couple employees, and they mostly don't have any revenue, and a lot of them are probably just scams, and then they just cease operations and then become worthless. So the point is that all the so-called revenue that Net Capital is generating is in the form of these equity stakes in these speculative startups, which are mostly scams, and then these startups cease operations, and then this supposed equity that Net Capital had received as revenue is then impaired down to nothing because these startups no longer exist. So this just goes to show the quality of the business model that Net Capital operates is extremely bad. It's basically a joke, right? They list these startups on the platform. They receive an equity stake in the startup. The startups almost always fail, and then that equity stake is worth nothing. Yeah, and then they have been constantly burning cash because they generate very little cash because the vast majority of their so-called revenue is equity stakes. So they're always burning, $1 to $1.5 million per quarter in cash burn. And then they have also, as Ryan showed in a previous slide, they have massively increased their shares outstanding. So they fund their losses with dilutive equity issuance. So Net Capital issues more of its own shares to raise capital to fund its losses. But the rate of cash burn is so fast that despite raising huge amounts of money by issuing new shares, they pretty much burn the money as fast as they can raise it. So their cash balance has been gradually declining. And as of the end of the most recent quarter, so that their fiscal third quarter of 2025, that's actually the 3 months ended January 31st, 2025. They have a weird fiscal year. But at the end of the most recent fiscal quarter, they had only $600,000 of cash on hand, and they burned more than $1 million per quarter. So they were on the brink of bankruptcy. And yeah, then it's the hyperdilution of the share count, as we looked at earlier. And then so everything looked, as of a couple months ago, everything looked like a disaster. The company was falling apart. All their revenue is this equity, which is basically becomes worthless. They are running out of cash. The share count is hyperdiluting. It looked like the company was headed towards bankruptcy. Then, just in the past few weeks, there's this massive increase in the share price. So what can explain this? Well, on June 12th of 2025, they announced that they had created a crypto advisory board that will focus on decentralized finance, DeFi initiatives. And they hired some crypto people to join this advisory board. So what is Net Capital going to do with crypto? Well, on June 26th, so just a couple weeks after announcing their DeFi advisory board, they signed a deal with a Swiss company called Horizon Globex GmbH. And in this deal, Net Capital is issuing 500,000 shares. So 500,000 Net Capital is creating 500,000 new Net Capital shares and giving it to Horizon Globex GmbH. In return, Horizon Globex GmbH is giving Net Capital a license to use some type of crypto software, and then Net Capital will have the right to commercialize Horizon's crypto software within the United States. So what is this? So they basically paid 500,000 shares to get this crypto software license from Horizon. So what is this crypto software? Well, Horizon, they have this crypto app, which they have operating in Europe. Well, it's I guess like a blockchain app. And what they do is it's a stock trading app that allows you to which allows you to invest in like stocks and NFTs, but it's done via the blockchain. And the way it works is Horizon, as the broker, will buy shares of the stocks from the stock exchanges. And then you as a user can get their app and buy and sell stocks. But instead of these transactions, when the end customer is trading stocks on the app, the stocks aren't actually trading on the stock exchange. They are trading on a kind of an internal ledger that Horizon maintains, and it's all these trades are calculated and recorded via blockchain transactions. So they're taking the stock market, but then adding some layer of blockchain technology into it, and then so these trades are technically happening on the blockchain. So what is the purpose of this? Well, it's not really clear. You can invest in stocks using this blockchain thing, or you could just get a regular stock investing app and trade stocks in the traditional way. I don't really see any benefit of doing it via the blockchain. It's just adding another step to the process, and then maybe it sounds cooler because it's blockchain related. And then also, I guess the only other thing is they have NFTs. You can also buy and sell NFTs on this app, and those transactions are also done via blockchain technology. Now, this app it operates in Europe currently, and it appears to be a commercial failure. On the Apple App Store, it only has 7 reviews. So 7 people have reviewed it on the Apple App Store. That indicates that almost nobody uses this app, because why would you? This app doesn't really provide anything that doesn't already exist. You can just use if you want to buy stocks, just use a traditional stock brokerage. Why would you have to use this weird crypto blockchain thing to do that? And yeah, so Net Capital is going to acquired the rights to they acquired the license of the technology behind this app, and then they're going to launch it in the US. But given that this was such a flop in Europe, why would you expect it to be any more successful in the US. Only 7 reviews. It's basically nothing. Now, after the announcement of the DeFi crypto, the DeFi advisory board and this licensing deal with Horizon for the weird blockchain app, the share price has increased massively. And remember that Net Capital is losing a ton of money. So as the stock price increases, that gives them an opportunity. They desperately need to raise capital. So that gives them an opportunity to issue new shares at a higher price to raise capital. And predictably, that's exactly what they did. So then on July 2nd, they announced a $10 million stock offering. And we can look at how their number of shares will increase based on just since the end of the last quarter. So as of the end of their last fiscal quarter, which was January 31st, Net Capital had 2.1 million common shares outstanding. On June 10th, they did a private placement where they issued 119,000 shares. Then on June 26th, they did this deal with Horizon to license this blockchain software, and they gave Horizon 500,000 new shares. And then this $10 million stock offering that they just announced, they will be issuing another 1.4 million shares. So if you add up all of those, the share count will increase to 4.1 million. So remember, as of the end of the most recent quarter on January 31st, they had 2.1 million shares. Now, just a few months later, their share count is increased to 4.1 million. So it's almost doubled. In just a few months, the share count has almost doubled. So that's the thing when you see these money-losing companies like Net Capital, whenever there's some hype and in this case, it was created by their DeFi advisory board. So whenever there's some hype that will cause the stock price to increase, well, the stock price will only go so high before they start dumping shares onto the market, and that will cause the stock price to start going down again. Now, they've just done massive dilution, but they have indeed raised quite a bit of capital. So just based on this most recent capital raise, they'll get $10 million. The company burns about $6 million per year. So this capital raise that they just announced will probably last them until approximately the end of 2026, and then they will have to raise new capital again. Now, our opinion of the company has not changed. We still think this is a failure of a company. This crypto app that they just bought the license to, there's absolutely no reason to believe that this is going to be successful by any stretch of the imagination, given what a flop that it's already been in Europe. And this whole, increase in share price that we've seen recently, just based on the hype of the DeFi advisory board and this licensing of this blockchain app, I think is completely misplaced. And now that the company has doubled its share count, and as those shares hit the market, that will put, selling pressure on the stock, and we expect the stock to continue on its downward trajectory towards zero. So that wraps it up for everything we had to talk about Net Capital today. As always, if you have any opinions or thoughts about Net Capital, let us know in the comment section below, and we will see you on next week's video.